first 100k is tough, but you got to do it. I don't care what you have to do. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on 100k. After that, you can ease off the gas a little bit. Charlie Munger. Charlie Munger is an American billionaire investor, businessman, former real estate attorney, architectural designer and philanthropist. However, he is probably most well known for being Warren Buffett's closest partner and vice chairman of Berkshire Hathaway. As the opening quote explained, Charlie Munger famously said that accumulating the first $100,000 is the most difficult part of building wealth, and in my experience so far this is true. In my last portfolio update, I mentioned that even though I hadn't contributed any money to the portfolio in the last month, as we are saving for our wedding, it still grew by more than I had previously been investing each month. That is compound interest in action. At first, it feels like you are saving everything you can and not really seeing much progress, but over time, the compounding machine will begin to take over and the investment returns will start to far outweigh how much you can contribute. I often see people obsessing over ways to get better investment returns or over-optimizing their portfolios and switching between what are essentially almost identical funds, even though they are just starting out and have small portfolios. But in the beginning, savings rate is far more important than investment returns, and they will be better served by either cutting expenses or increasing income, which will make much more of an impact than getting an extra few percent in investment returns. It can take years to get to the first 100k threshold, but after that, compound interest starts increasing exponentially year on year. Let's look at an example. Let's imagine someone is on their financial independence journey, and after cutting costs and increasing their income, they are able to invest 12k per year, or 1k per month, into a broad-based, low-cost stock market index fund returning approximately 7% annually. Over a 40-year investing period, the final future investment value would be around $2.48 million, which equates to around $480,000 deposited and a total investment return of just over $2 million. As you can see, it would take just under 7 years to hit that first 100k, but if they continued to invest at the same rate, then they would hit the next 100k in just over 5 years, and over time each 100k gets quicker and quicker. Once you get to the 1 million mark, the next 100k takes a little over a year. The more the wealth builds, the more your investments do the heavy lifting for you. In this hypothetical example, in that final year, the investment returns alone are over 160k. I think this goes to show that no matter how small the investment, if you can get into that mindset of consistently investing money as regularly as possible and as early as you can, before you know it, that snowball will be building up pace and compound interest will begin to kick in. And over time, your income should increase, as well as allowing you to speed up the compounding machine even further. Don't get stuck in the trap of over-optimizing and tinkering with the portfolio. Pick a sensible, suitable strategy and focus on getting to that 100k as quickly as possible. Your future self will thank you for it.